the pay-as-you-go tax variation or the income tax withholding variation, which is something that people can use to help with their cash flow. But you've got a view on this that I found interesting, so I'm keen to share that with our community.
Yeah, virtually to get this, you have to do the tax return for that year and to estimate the value. And it's not that hard to do while you're doing the previous year's tax return. So that's the time to do it, not going separately and the accountant has to get their head around it all again. But you're not getting any more money for it. All you're doing is getting the money a little bit earlier, because the tax office is going to tell your employer, well, they're going to get a $2,000 refund at the end of the year, so reduce their monthly pay by this little amount to make up for it. So it's not great. Interest rates are only 2%. So again, not a huge amount of savings, and it's going to cost you money for your accountant to do it.
If everyone's listening to this and they're going, well, what are they talking about? It's basically what I use is a number. Let's say you were due $5,200 tax refund. What you can do is you can write to the tax department and say, hey, listen, I'm expecting a $5,200 tax refund. So instead of waiting till the end of the year, can you actually give it to me $100 for 52 weeks in my pay? They'll write a letter to your employer. They'll say, take $100 less out of their pay packet each week, because you can give it to them now and it helps with the cash flow during. Now, I did it back in 98. Interest rates were much higher. Even when I was buying my first properties and helping clients back then, nearly every property we purchased was cash flow positive. So it kind of made sense. You get money, and it was part of the I guess, the paradigm at the time. But what you're saying is you feel like it's got diminished assistance because, well, interest rates are so low. Part of the appeal was to get your money earlier so you could put it into your offset account so that you can be reducing the amount of interest that you're paying. But you're saying now that it's negligible, it may not provide that same advantage, given that you may be paying premium on your accounting fees because the accountant has to pretty much do the prelim work and the tax work at the end of the year.
Yeah, and you don't get your refund a year earlier. You just get it amortised over 12 months. So it's not like you're getting it all up front and saving a whole year's interest.
So there you go, folks. For those of you that are cash flow tight and it wouldn't make a difference week to week, well, it's available for you. But for the majority of folks, Julie is saying the benefit may not exist to the extent that it once did. So.